Have you ever wondered what really causes those sudden, dramatic swings in the crypto market? Those moments when prices seem to skyrocket or plummet out of nowhere? It's a question that puzzles both new and seasoned investors alike. More often than not, these big moves are triggered by the actions of whales, investors or entities who hold massive amounts of cryptocurrency. When they make a move, the entire market feels it, sometimes within seconds. Imagine a peaceful lake, toss in a small pebble, and you'll see gentle ripples. But throw in a huge boulder, and the waves are impossible to ignore. They reach every corner. That's exactly what happens when a whale acts in the crypto world. Take, for example, the recent transfer of 157 billion SHIB tokens. This wasn't just a minor transaction, it was a seismic event that sent shockwaves through the entire Shiba Inu market, sparking speculation and concern among traders everywhere. At Crypto Insider, we keep a close eye on these whale movements. By tracking their actions, we can better understand how these massive trades impact not just the market, but also the everyday investor who might be wondering what's coming next. This isn't just another routine transfer. When a whale moves this much crypto, it raises important questions and can even create a sense of urgency or anxiety in the market. Is this a sign of a major shift, or just a strategic play? Could this be the start of a price drop? Are we about to see a wave of selling, or is the market bracing for something else entirely? Or perhaps there's a different motive behind the move, one that isn't immediately obvious. Sometimes, these transfers are part of a larger strategy, or even a signal to other big players. Thanks to blockchain transparency, we can see exactly what was moved and when. But the real mystery is the why, the intention behind the transfer. That's the part that keeps analysts and investors guessing. Is the whale preparing to cash out after a recent rally, or are they simply moving assets for security or strategic reasons? Each possibility can have a very different impact on the market. In this episode, we'll break down the clues left behind by this massive SHIB transfer, analyze the potential outcomes, and explain what it could mean for your portfolio. These moments are more than just headlines. They're valuable lessons in how market structure works and how a single player can influence the direction of an entire asset class. So, let's dive deeper into what this massive SHIB move could mean for your crypto journey, and how you can stay informed and prepared in a market where the next big wave could be just around the corner. Let's break down what just happened in the world of Shiba Inu. In a single 24-hour window, a staggering 157 billion SHIB tokens were transferred out of private wallets. That's not just a routine transaction, it's a massive movement that immediately raised eyebrows across the crypto landscape. These tokens didn't just move anywhere, they were sent directly to major exchanges like Crypto.com and Coinbase, two of the most prominent platforms in the industry. This kind of transfer is far from ordinary. The sheer size of the transaction instantly caught the attention of financial analysts, traders, and the entire SHIB community. Social media and crypto forums lit up with speculation and concern, as everyone tried to figure out what this could mean for the future of SHIB. Think of it this way, moving tokens to exchanges is like unloading a massive shipment of products onto store shelves, making them available for anyone to buy. When this happens on such a large scale, the market takes notice, and speculation about a potential sell-off begins almost immediately. Just days before this transfer, the SHIB army was riding high, celebrating positive momentum and exciting ecosystem developments like the launch of Shibarium. There was a sense of optimism and unity within the community, with many believing that SHIB was on the verge of a new chapter. But now, the mood has shifted. The conversation has turned to concerns about increased selling pressure and heightened volatility. Investors are anxious, watching the charts for any sign of a major price swing. The identity of the whale behind this transfer remains a mystery. But one thing is clear. This was a calculated, strategic move, not a random act. Whether it's a single entity or a coordinated group, the intent seems deliberate. To the market, this looks like a bearish signal. Such a large influx of tokens onto exchanges could flood the market with supply, putting downward pressure on prices if buyers don't step in. If demand can't keep up with this sudden surge in supply, there's a real risk that SHIB prices could drop sharply. Investors are bracing for possible turbulence ahead. Right now, everyone is watching closely to see if this is just a quick sell-off or the start of a more gradual shift in the market. The next few days will be critical in determining SHIB's short-term direction. No matter what happens, this is a pivotal moment for SHIB and its community. The outcome could shape sentiment and price action for weeks to come. Let's dive deeper and examine how this massive transfer could impact SHIB's key price levels and what traders should watch for next. To gauge the impact, let's talk support and resistance. Basic trading concepts. Support is like a floor where buyers step in. Resistance is a ceiling where sellers push back. A huge influx of SHIB onto exchanges thickens resistance, making it harder for prices to break higher. Buyers now face not just regular selling, but a massive new supply. If the whale sells aggressively, support levels could be tested or broken, leading to further declines. The big question: is there enough buying power to absorb this wave? Traders are watching SHIB's chart for signs of cracks or resilience. These levels will determine if SHIB can weather the storm or if more downside is ahead. Understanding these dynamics is crucial for your next move. Beyond support and resistance, technical indicators like moving averages and RSI help traders read the market's mood. If SHIB's price is above its 50-day moving average, that's bullish. Below it, bearish. The RSI tells us if SHIB is overbought, above 70, or oversold, below 30. Before the whale move, if RSI was high, this transfer could trigger a correction, confirming the rally was losing steam. If prices drop sharply, traders will watch for an oversold RSI, which could signal a rebound opportunity. Combining news of the transfer with these indicators gives a fuller picture. Smart traders use both to decide whether to buy, sell, or wait. Right now, all eyes are on these signals for SHIB's next move. Let's explore the psychology behind moving tokens to exchanges. Why move such a huge amount of SHIB to an exchange? The most likely answer: to sell. Keeping tokens in a private wallet is a long-term play. Moving them to an exchange signals readiness to trade or cash out. This action alone shifts market psychology. Traders brace for increased supply and possible price drops. Even if the whale doesn't sell immediately, the looming sell wall can dampen enthusiasm and cap rallies. Buyers hesitate, knowing a big sell-off could hit at any time. While there's a slim chance the whale is repositioning for staking or another purpose, the market usually bets on a sale. This probability drives cautious or negative sentiment. In crypto, perception often becomes reality. To truly understand today's dramatic move in the market, we need to rewind the clock and revisit June 2022, a month that left a lasting mark on the crypto world. Back then, SHIB and the entire crypto market were caught in the grip of a relentless bear market. Prices were tumbling, and panic was spreading fast. Whales, those massive holders, were dumping tokens at an alarming rate, sending shockwaves through the ecosystem and causing prices to spiral even further down. Large, sudden transfers to exchanges only made things worse. Each move fueled a vicious cycle of fear, uncertainty, and more selling, as investors rushed to cut their losses before things got worse. Fast forward to today, and the landscape looks very different. The market has recently experienced strong rallies, with SHIB among the tokens showing impressive gains. This latest whale move comes on the heels of a price surge, not a collapse. That's why this could be a classic case of profit-taking, rather than panic selling. It's a crucial distinction, one that can change how the market reacts and how investors interpret the move. In a healthier, more optimistic market, these kinds of large transfers can be absorbed with less drama. The lesson here is clear. Context is everything when it comes to understanding market moves. The same action, a big transfer, can have wildly different outcomes depending on the mood and sentiment of the market at that moment. Studying past events like June 2022 gives us valuable lessons and helps us prepare for what might come next. But it's important to remember that every situation brings its own unique set of circumstances and challenges. So, will this massive transfer trigger another crash, or will it just lead to a brief dip before the next rally? Only time will tell. For now, all eyes are on the community's response, as traders and investors weigh their next moves in this ever-evolving market. Charts don't tell the whole story. The SHIB Army's passion and resilience are a major force. This community has weathered storms before, rallying together to support the project and each other. In times of uncertainty, they counter fear with facts and reinforce SHIB's long-term vision. Thousands of small holders can absorb whale selling, showing the power of decentralization. SHIB is no longer just a meme coin. Projects like Shiba are building real utility. Ecosystem growth provides a foundation for long-term value, beyond short-term whale moves. For many, this event is just noise on the path to bigger goals. The community's resolve is a key asset as SHIB evolves. So, what does this 157 billion SHIB transfer mean for you? Short-term, it's a warning. Expect volatility and watch key support levels. For traders, tighten risk controls or wait for clearer trends. Long-term holders may see dips as buying opportunities, trusting in SHIB's ecosystem and community. No one can predict exactly what the whale will do next. Analyze the data, but don't panic. This is a reminder to do your own research and stay focused on fundamentals, not just headlines. Patience and perspective are your best tools in a volatile market. What's your take? Threat or opportunity? Join the conversation and stay informed with Crypto Insider.